Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hello, everyone. My name is Brian Love. I'm the head of Banking and Fintech Recruiting at Travillian. Travillian is celebrating its 25-year anniversary this year, helping financial institutions across the country with their talent, succession, recruitment, and retention needs. Today, I am joined by Scott Mills, president of William Mills Agency, which is one of the most well-known PR marketing firms in the financial services space. Welcome, Scott. Would you like to maybe further introduce yourself?
Sure. Thanks for having me. That was such a lovely introduction. I probably don't have much to add, but it's a pleasure to be here today and have this conversation. And just to provide a little more context to who the agency serves, we work with two of the most respected banking associations in the nation. That's ICBA and BAI. Beyond that, we work with a number of companies that provide technologies or information that help run the financial industry. So names like Equifax and Jack Henry and NCR, as well as a lot of early and growth stage fintechs. And so I appreciate the chance to talk to you today.
Yeah, Scott, you represent a kind of an interesting perspective on the space. And I know we have a lot of mutual friends out there, and maybe even some clients we share. But the whole, the reason I reached out to you was as we look back at the failures of Silicon Valley Bank, Signature Bank back in March, and the others. I wanted to actually get a PR marketing guru's take on those bank failures. And Silicon Valley Bank specifically, there was a lot of talk about how social media expedited the departure of deposits, Twitter, right? It kind of caught fire through Twitter and social media. And I wondered if a PR professional like yourself, could kind of reverse engineer how they could have better handled that. Or at the very least, just tell me your perspective of that.
Yeah, happy to. And, we've got the benefit of a couple months since this has happened. If you were to look over on the other side of my wall, you would see a little museum I have for money and in banking. And one of the things I've since bought is I bought an SVB employee water bottle. I was like, I need something SVB for my museum so we can talk about it because it leads to interesting discussions. That's that bank's experience was breathtaking. And you and I hope you don't mind me sharing the story, but you were like, how do you feel about a collapse that it was caused by social media? I was like, it wasn't caused by social media. So here, and let's have some fun here. But I had a nice conversation with a friend of mine who's in the venture business. And he said, it was a matter of self-preservation. That's what happened. If you were a VC portfolio and you had a lot of portfolio companies with their assets, their money at SVB, and you were concerned you might not have access to that or might lose some of it, you were having emails go out saying, hey, something's happening here. We need you to move your money. So email may have had more impact than social media in how quickly money was being pulled out of the bank. But I think the point to focus on here was a matter of self-preservation. So there was no fixing this via social media. They could have done some things differently. They may have scared some people. It's kind of like if you see a bank president say, it's all safe, your money's safe here with us, there's nothing to worry about, but you've never seen that person before, I'd be more nervous seeing that mess. That's me. But there's been a lot written about SVB and the amount of non-insured deposits, and it led to a lot of good discussions. And I think long-term, it's really good for the industry because maybe we'll see different approaches to regulation, different approaches to managing risk, all these things bankers are really good at. But we have kind of a three-tiered system. We have large banks, regional banks, and community banks. And they just run totally different. You can't compare a bank in Albany, Georgia, and serving the community to what happened at SVB Bank. And the other shocking thing about all this coverage about SVB and other banks in trouble was we've managed to scare the people. People here in the U.S. are now. I know I've seen some studies, but there's been at least one study about how people are nervous about the banking industry. They really shouldn't be. So yeah, I wish I had a nice clean answer on what I would have done differently. I think it was I don't want to, it's not exactly unique, but it's a rare what they experienced and who their customers were and the risk associated with SVB was just dramatically different than most other banks' experiences.
Well, and I guess the other thought there, Scott, is, and I agree, I appreciate you kind of disagreeing with me, but one part of the job that you do for your clients is crisis communication.
Yeah.
Right. And so I'm just kind of curious, because you did see a little bit of a trickle down effect. And a lot of my smaller banks did face a little bit of deposit outflow, but they also, frankly, got a lot of deposits in too. In terms of crisis communications, a run on the bank has got to be like the 50th thing on the list of what you're, hurricane, earthquake, those things are probably a little bit more top of the list. I'm just curious what your advisory is. Have you heard from more banks, kind of thinking through a bank run or a failure during their crisis communication?
Yeah, so the interest in crisis planning is up a little bit, is our personal experience. I don't have broader research to show that, but people are thinking about it. And I'm a little surprised every bank doesn't have a crisis plan now. And some of that kind of stuff is boring stuff. You reference kind of physical challenges like a tornado or a fire or something like that. That falls under the more easy bucket to fix, or to plan for in a comms plan. But here's the secret from my seat. Most people don't game plan crises until they actually happen. And in the case of this bank, if they had asked me to do a plan, I probably would have, said great. But you said maybe 50. That probably would have been somewhere around 100 or 200. The bank experiencing run that just wasn't on anybody's radar, which what just makes it so amazing. And we should learn from that. And we should, to your point, you're giving me a lesson on crisis planning. We should include some references to crisis of reputation, maybe. Maybe it comes in different forms. What do we do in the event our reputation as a financial institution has taken a hit? Who should be talking? What kinds of things should we be? How can we address it? How much can we game plan? And one thing I enjoy is the occasional mock exercise with a financial institution or an executive where I pretend to be a reporter and ask them questions that they've never really planned for. And then you watch their face, all the blood drain and stuff. And then part of the fun is dissecting what they said and what they should have said afterwards. So media training is really meant to be a practice exercise. It's not meant like how do you work around a reporter and sneaky questions. It's how do you prepare to answer difficult questions and think on your feet. So kind of like you right now, I'm all nervous here. You asking me questions.
Yeah. I think you need some rouge to get some more of that color in your face, because I'm such an intimidating interviewer. But no, reputational risk is real. And you made me think of, like Silvergate Bank and the proximity to FTX and crypto, and just that reputational connection to that world. There's more to it, but that kind of sunk that bank, which is still alive, by the way. They have not totally failed just yet. In any event, let me move on. And I appreciate your thoughts on that. Crisis of confidence and loyalty You know, the rise of bank deposits and relationships moving from bank to bank. And, you know, I think you and I talked about, you know, how Apple came out with a good savings rate and everyone seems to do that. I just kind of, I wanted to hear your take on, you know, best practices for financial institutions in this moment where rates are off the charts, consumers have woken up. You know, what's the best way to keep a consumer at your bank?
Yeah, that sounds like a baby $1 billion question right there.
I know.
We can go a couple different directions with that question. Some of it's technology, some of it's people. I'll start with two examples. One, our small business in Buckhead, North Atlanta, basically, been around since 1977. Only had a handful of banking relationships. We're very loyal, or maybe we're lazy, but part of our desire to switch banks recently was we didn't have a relationship with anybody that mattered, and there was a change in ownership, and we just felt like we were kind of like a second-class citizen. Now, it wouldn't have taken much to keep us, and actually we are keeping some business there. We're just opening up another account and having a relationship with another bank that may eventually take that one over. So it's a little simplistic to say you need to have, you know, appropriate amount of touch points and people, but reality is we didn't have a banking partner, or we didn't have a bank that felt like a partner anymore. Maybe it did in the beginning when we needed a commercial mortgage for the building we're in. That's one thing, and I'll answer the question. But the other example I wanted to provide is my son, who doesn't have a whole lot of cash at the moment, is interested in a new bank as well, and I'm like, I'm happy to help you figure that out. You know, I'm kind of going through that with the business. And oddly enough, against all research we've seen in the industry for the last, 10 years, he wants to be able to go to a branch. That doesn't mean he's going to go there, but I'm like, a branch? He goes, yeah, well, I want to be able to look at somebody if something's not, right, or I got questions. I'm like, I get it, but you also want a great digital experience. It was like, oh yeah, whatever. So let's talk about loyalty. Okay, in the case of the Apple Card, they were flashing a really great return on savings, and I'm curious to see if they can convert that hot money into long-term customers. And the answer is they probably got a pretty good shot because people like Apple and they do a good job with technology. They'll figure it out. I think they're stumbling now. I did read a piece, I think it was an American Banker, about people it taking 2 weeks to get their money out. So anyway, they're stubbing their toe a little bit now, but I think that's a long term to keep the thing for us to keep our eye on and see what we learn from that. Is the answer always give away the highest rate possible? Well, if so, well, that's probably going to hurt our profitability a little bit. There are some things from a technology standpoint that banks and bankers need to be thinking about, and I'm a little stunned that more of them aren't studying the money flowing out of the bank. Yes, we use our primary bank as a kind of a payments warehouse. I got to pay that bill. I got to pay that bill. But there was a time when I was changing bank relationships. I was taking big chunks of money and I was putting it over here, big chunks of money over here. I shouldn't say too big, it was modest. But no one from the, if that was a customer that I saw and I saw them take their, savings down by, 80%, as a person, I'd be saying, I'd call them up and say, hey, I see you're doing some things here. I want to make sure that we didn't do anything wrong, or is there something I can help you with? That's a personal thing, but you can use technology to help alert you to changes in behavior and things like just studying where the money's going. So if you were a bank and you saw a whole bunch of money going to Apple because of that rate, you got to address that issue. So it's not a technology issue, it's not a person, but it's an everything problem.
Well, I hear a lot of things there too. Like data is everything, right? You need to know where, the habits of your clients, I'm still flabbergasted about your son's decisioning for this bank. My personal opinion is he likes lollipops or something like that,
I
right?
don't know.
Taffies or
Maybe he
whatever.
likes talking to tellers. I don't know.
Maybe, or the change machines, maybe, but ultimately, the loyalty piece, the relationship piece is how it's really the main mission statement for community banks, right? Is that you'll know your banker. And I see that moment you got to with William Mills, where you didn't really know your banker anymore. So I think that's incredibly important. This is a rhetorical question. I just wanted to throw it out there. One of the best leaders I had when I was a banker, he always said to me, how many basis points is your service worth? And I thought it was a brilliant question because, if that CD rate was 25 basis points higher down the street, but they knew Brian was going to be their banker for 25 less, would they stay with Brian? Or would they go for 125, for 25 minutes? So I always kind of throw that question out there. I think it's pretty ingenious.
Yes. And I think part of the loyalty thing is what's the impact of people versus my loyalty to an institution. So for us, staying with a bank that changed names, 3 or 4 times over 20-year period, we were loyal to them, but they weren't really loyal to us. And it wasn't until we realized that, my God, we've been doing business with them for this long, but no one cares. No one gives a crap. No one's coming around the office. Maybe once a year we might get a business card thrown on our desk, but that's not good enough. So for us, we'd much rather, I used the term partner before, we'd rather have somebody we trust and consider a partner who can look at us as a business and say, hey, why don't we try this? Or I see that you've done this. Have you ever considered X? That kind of advice, if you can get it when you ask for it, wonderful. If a financial institution can figure out how to flag things, bring things to their attention based on data to have a better relationship, why wouldn't they do that?
Yeah. Well, and everything you're talking about, it sounds like you want to have that piece of talent, that touch point at that bank that you know. So that's something you and I have talked about quite a bit in some of our previous conversations, talent. I think that's the big fire right now in the bank space. And I do feel like attracting the talented individuals that'll stay with your institution, that'll be your frontliners and backliners and executives. That's the big puzzle right now for community banks. What's your take on that, Scott?
I think talent's probably more important than technology, to be honest with you. Nothing excites me more than meeting a creative banker, someone that thinks a little differently, somebody that's doing something a little special. There's a banker I respect quite a bit in Nashville. They do a lot of work around manufactured housing. That's something I know very little about, but you could see the spark in his eye when he talks about that industry. And not only the industry, but how to provide affordable housing to a lot of people that can't afford houses these days. I mean, that gets me excited. There's also a bank, I believe they're in Wisconsin, called Incredible Bank, that has done some really cool things in terms of financing for nice big RVs. So a lot of banks finding, and I'm probably going way off the question you initially asked, but
Okay.
It's creative people in banking that make anything possible. So as someone who represents a lot of technology firms, if the bank's not in a position to recognize how they could benefit or how they could grow or reduce fraud or do whatever with the stuff, that they're not going to get anywhere with that discussion. I'm particularly interested in workforce development. I've been talking to a handful of universities around the U.S. talking about what they teach and how they teach it. And one of the things you may know, being in the business you're in, is a lot of universities have taken the word banking out of their degrees. They don't offer banking degrees; they offer finance. Well, for our industry, it's in all of our best interest to make sure people know that there are opportunities as a profession in banking, and as best we can make it sexy. It's been a few years, but I did give a discussion to some bankers a while back, and I said, look, if you have a green screen in your bank and you talk about the bank being around for more than 100 years, you're scaring off young people that want to do that might want to come to work there. So you're competing with companies that have offices, technology firms. Google opened a nice big office in Atlanta, and if you want young talent that knows what's possible with technology or doing new things on the digital banking front, we've got a lot of competition. It's not the community bank or the regional bank across the street. It's cool companies that are now doing business in your area.
Yeah, and thank you for shouting out. You made me think of Kathy Strasser, who I believe is still at Incredible Bank. We know those guys a little bit.
Yes.
So I haven't thought about them, and I think I know who you're talking about in Nashville as well. But it's a great point you make about, you can't think about stealing talent directly from your bank competitor. You really need to think about where the talent is going to and trying to intercept them from going to the Googles of the world. And frankly, if you steal from your bank competitor, is it really going to grossly improve unless that bank is already very progressive and innovative, right?
Well, you got me thinking. I was at an event with Jack Henry recently, and they were sharing some research of bank CEOs and credit union CEOs. And the question was around how many FTEs do you have that manage fintech partnerships? And, I'm thinking probably a couple, I don't know. But for most community financial institutions, that answer is one or less. And so maybe that's a reflection of what they're asking the C-suite to be responsible for, their EVPs or SVPs of operations, those kinds of things. But the reality is banks, as with a lot of companies, are built on decisions that were made previously over previous years. Who are their primary or significant technology partners? Who are the companies they align with? Who do they seek advice from? Do they have bank consultants that they check in and go, hey, I'm thinking we need to do this. Who should I be looking at? The answer is, let's take a look around the bank, and let's be very candid and open and real about who's not at the table. Who do we really need that we don't have now, and how are we going to get there? And I think talent's an ability to recreate yourself. And we've talked about a couple of really talented bankers even prior to this call. And again, it's a reflection of the people that you have, that they're service minded, that they're problem solvers, that they're creative, that they're strategic in how they approach opportunity, and they're just not comfortable with doing the same thing that everybody else is doing.
Yeah, I think a lot of trends will come out of the first part of 2023 for talent, for the types of skill sets that banks are looking for. And I think that's going to do a lot with risk, financial risk, ALM. I think you mentioned efficiencies and technology quite a bit in other conversations. And I think people who understand AI, people who understand automation, saving money, I think that's going to be a big skill set. Generally, that skews a little younger, but it doesn't have to. Looks like you want to say something, and then we'll come to a close here. Yeah.
Well, if it's worth closing on, but you got me thinking in your comments, I couldn't help but jump in.
Okay.
Maybe part of the talent that we're looking for at banks are the kinds of talent that can manage talent outside the organization. So I talked about, who's around the table, but the sense that I'm getting is that banks will be using more third parties, more outside partners, vendors, solution providers, whatever you want to call them, and at what level. But maybe the banker of the future is the one that can most successfully work with companies outside your organization that your success depends on. Just a thought.
That's a great thought. And also the risk manager who kind of protects the bank and the vendor to kind of bring it back to that reputational piece and the third party risk management piece. I totally agree with you. So let's end on an agreement, because we disagreed on so much. No, I'm joking.
Oh, I also like your shirt, by the way.
Oh, well, thank you. We're going to edit that and put that at the very beginning. In any event, Scott, thank you so much for your time. It's actually, it's very unique to hear someone in your line of work and your perspective. And I know you're a fan of the space like I am. So I look forward to future interactions.
Thanks again for having me.